Are you prepared for a recession? In this video, we'll explore the psychology of investor behavior during a recession and learn valuable lessons from the past. Investing during a recession can be challenging. The uncertainty and market volatility can make it difficult to know what to do. But understanding investor behavior can help us make better decisions. During a recession, many investors tend to panic and sell their investments when the market is down. This fear-based reaction often leads to selling at a loss and missing out on potential gains when the market recovers. Instead of succumbing to fear, it's important to stay calm and take a long-term perspective. History has shown us that markets recover and economies bounce back. Let's look at a simple example to illustrate this. Imagine you invested in a company's stock before a recession. The stock price drops significantly during the recession, and you start to worry. But if you hold on to your investment and stay patient, you may see the stock price rise again once the recession is over. By understanding the psychology of investor behavior during a recession, we can make more informed decisions. It's important to focus on the fundamentals of the companies we invest in, rather than being swayed by short-term market fluctuations. During a recession, there may be opportunities to invest in undervalued assets. By keeping a cool head and doing thorough research, we can identify these opportunities and potentially benefit from them when the economy recovers. In summary, don't let fear drive your investment decisions during a recession. Learn from the past, stay calm, and focus on the long term. By understanding investor behavior, we can navigate the challenges and potentially thrive in uncertain times. Are you prepared for a recession? Investing during a recession can be challenging. Don't let fear drive your investment decisions. Learn from the past to navigate the future. Unleash your potential. Start today.